Okay, welcome to the process trading right edge trading system where we day trade the S&P E-mini using the 1500 tick bar chart. And as you know, we look back one day to look at the daily money-making setups that were available to us on the prior day's trading. So in this instance, we're looking back at Friday, May 4th. And we'll see that Friday was a strong trending day to the upside in the S&P E-mini. And we'll see how it started and exactly where we could have got in. Now, if you know the process trading right edge trading system, you know we have a trend trading system and a discretionary trading system. And they work in harmony or they can work separately. So in this case, we're going to take one discretionary trade and 3 trend trades. And let me show you how that would work. Right here is when the market opened. And we see what price has done here. We also look at the process trading VWAP line. Here it's gray and here it's yellow. When it's gray, you can only take trades to the short side when you're doing trend trading, and you can only do it by placing your trades according to the process trading trade management technique where the timing alert dots are above the price bars. When the VWAP line is yellow, then you can only trade or trend trade to the long side, and you can only do it in conjunction with timing alert dots that are below the price bars. So these are going to be our 3 trend trades, and I'll tell you the trade management technique that allows us to get into those and capture this uptrend. But the day started out with a discretionary trade. And the way that that worked is that we see after the open here, price started to come up. It hit the VWAP line. Now, the VWAP line also acts as support and resistance. Since price was below it, of course, this is resistance. It comes up to resistance, and it was resisted, and price falls back down. A short time later, then, price continues above the VWAP line. This time, now that it's above the VWAP is acting as support. It comes down and it is supported. Then price goes up a little bit and it falls back down again to the support line. And for the second time, price is supported. For these reasons, we're now going to be looking for a discretionary trade that can let us take advantage of the system, because we know that when price goes above or below the VWAP, that there's a good chance that there will be a trend to it. Also, way back here, we had a trending dot. So we're looking for a trend to take place, and now we are contemplating that price is going to trend to the upside because of the support we've seen in the prior indications. So we do not have any timing alert dots here, so we can't apply our normal trade management technique. So what we're going to have to do is we're going to have to use a discretionary trading. And we do that by using the discretionary indicators down here. First of all, we have the INTERG, which stands for internal energy, and then we have the sentiment oscillator, and down here we have the short trend oscillator. For us to take a discretionary trade, either to the short side or the long side, in this case we're taking it to the long side, all these discretionary indicators must agree. So they are in agreement here where the arrows are, and I'll explain that. We see right here that price was strong because of the energy in it was strong. When we know that because of the green lines in the histogram. Then price becomes weak. We know that because of the gray in the histogram. Now the histogram went down, and we know that the nature of the INTERG indicator is to form an apex, then a valley, then an apex, then a valley, then an apex, then a valley. So we know that it formed the apex here, and then it formed the valley. Now, if you want to use your traditional type of analysis, you can see that this was a divergence because price is going up, yet the energy is coming down in it here. So it's going to be like a spring-like action. But the main thing here is the energy had turned green, which is a positive indication of price going higher. Now we come down to the second arrow here in the sentiment oscillator, and we see that momentum crosses the midline. It has come up from the bottom, crosses the midline, and the very important part is that it crosses the sentiment line as well. The sentiment line is starting to slope up, but the strong indication is that momentum crosses the sentiment line, and it happens to do it right when the energy had turned positive as well. The other discretionary indicator that we're looking at is the short-term trend oscillator, and we see that that had come up from the bottom. It had crossed the pullback line. The pullback line is the yellow line right here, which often, if price is going to show signs of not being able to have continuation, it'll come up to the pullback line and fall back a little bit like it did right here. And that's indication of this type of movement. But then it did cross the pullback line, which is a stronger sign. And now it is here riding the upper bound of the oscillator. So we know that the trend is gaining strength to the upside. As well, the upper bound is starting to slope, and that's part of the uniqueness of this indicator, that it not only forms an oscillator with the upper and lower bound, but those upper and lower bounds change in their relationship as far as width, and that helps them form channels that we can also discern information from. So these three indicators, all discretionary indicators here, are in agreement that price is going to go higher. Our classical training tells us that price had hit support twice and did not fall through, and now is starting to go up again. So right at this point here, this is where we're going to get into our long trade. Now, we never would have got out of our long trade for the whole day. Well, basically, up in this area we might have. But now you can see the uniqueness of how the indicators work together. Even though the oscillator had highs and lows, and the energy within the movement as it continued to trend upward did form peaks and valleys, the trend oscillator, it was hugging the upper bound, even above it sometimes. It hugged the upper bound. So the short-term trend oscillator in this case was a very primary factor in us determining that there's no sense in taking our trade off. Even though in a normal oscillator, when it dips down like this may show weakness. We did see weakness in the energy of the movement coming in. And in fact, we did see a little dip here in price. But even though we saw the energy was getting weak, and that's this right here, and we saw that the sentiment actually stayed above the upper bound, which is very strong in itself, but the momentum actually crashed down through the midline and was heading for the lower boundary. But the sentiment oscillator, the short-term trend oscillator, was hugging that upper bound, showing that that short-term trend was just not going to give up. However, had we not gotten in here, and were we not paying attention to the discretionary indicators, especially the short-term trend indicator in this instance, then we would have followed our trend trading rules, which said if the process trading VWAP is yellow and it has green segments within it, then we can take any timing alert dot that is below the price bar. Here it is below the price bar. And the way that we manage that trade is we look to the high of the price, the high of the price within that price bar that's associated with this timing alert dot. Then we place our trade 2 points above it. That would have got us in right here. And then if we continue with the discretionary indicators, we would have just followed it all the way up. Or we would have taken our 1, 2, 3, or 4 points, whatever was our objective. Because from this point here to up here, that was around 6 points, a little over 6 points from there to there. And then the next place that we could have got in, had we not taken either of the prior two trades, is right here. And again, we would have done that because we're simply following the trend trading rules that tell us that if the VWAP was yellow with green, we can take the timing alert dot we look at the high of the price bar above it, get in 2 points above that bar. That's where we set our order entry. And we would have got in right here, and we could have wrote it up to here. So if we would have got in here and we would have wrote it up to here, that's good for like 11 points. And then the same process would have been repeated right here to go up for another 3, 4, 5 points. So we see how the trend trading worked and how effective that was, but we also see the discretionary indicators and how it helped us make a discretionary trade to get in it, the trend way at the beginning. And also, whenever we did take a trade, we looked to see if they were helping to confirm it. In this case, many cases, it will be the energy or the sentiment oscillator that help as primary confirming factors. But today was such a strong trending day, it was the short-term trend oscillator that told us the whole story on how strong the trend was and the risk reward, in other words, the high probability the price is going to continue to go higher. So that's how the indicators work, as well as the trend trading system. If you want to see daily setups every day from the process trading right edge system, you can subscribe if you like, or if you want to know more about the system, you can go over to processtrading.com and check that out. And until the next video, I hope all your trades are successful and you have a great week.